You need to know what's going on in the housing market today, and I'm here to help break it down for you. My name's Stephen Stanley. I'm a realtor in Moorhead, office of United Real Estate Lexington. So let's talk about the three most important topics that you definitely want to be right on top of in the housing market today. We're going to be talking about what's happening in the current market, why the market won't crash, and the big one that everybody wants to know is what's ahead for the forecast for the rest of the year. What are the experts saying about the rest of 2022? So I'm going to jump right in with our first topic. We're going to get started with what's happening in the current housing market. Now, I think we can probably all agree that this year is really defined by what? Rising mortgage rates, right? And what you're looking at here on this slide is the Freddie Mac 30-year fixed rate from January all the way through to the latest data that we have. And what we can see over time is that mortgage rates really ticked up week after week after week. And you know, they started to potentially peak right around the mid-June, end of June time, and now we're seeing a lot of volatility. So when I say they've peaked, definitely not out of the woods yet. Signs, yes, but mortgage rates are showing a lot of volatility right now. Where we are today, a little bit lower than that, were we about a month ago, but of course we're still watching them. A lot of this has to do with the moves that the Federal Reserve is making to ease inflation. Inflation is the enemy of long-term interest rates, and that's exactly what the Fed's trying to do by trying to ease inflation. Now, we're still watching that for sure, but as this starts to happen, the fear of recession comes into, of course, the conversation. And what does history show us about what happens to the housing market during recessionary times? History shows us that mortgage rates typically fall during a recession. Now, I'm not here to argue whether or not we're in a recession or not. The National Bureau of Economic Research says a recession is a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. That's what they say. What we also know is what the widely held belief is that a recession is 2 consecutive quarters of negative growth. If you look at this chart right here, you can see that going all the way back into the 1940s. Every time that we've seen 2 consecutive quarters of negative growth, a recession has been called. The question I want to answer is, how would the housing market be impacted by a recession? So if we look at what the data says, what history says, a recession does not mean falling prices. If you follow along with me for a while, I've shown you that in the 4 of the last 6 recessions, home prices have actually appreciated in value. Now, we all remember 2008, home values nearly lost, 20% value. That's a fundamentally different place than we are today. The market was drastically different. Lending standards were drastically different. That was an anomaly, okay? But truth be told, 4 of the 6 past recessions, home prices have actually appreciated. And historically, a recession also means, as I just showed you, falling mortgage rates. Now, as we look at the data about what's happened with mortgage rates over the past 6 recessions, those have also declined, right? That's what you can see here. This is the decline, the percentage points decline in mortgage rates over the last 6 recessions, from the peak to the trough. You can see every time mortgage rates have ticked down. So that could be really good news for the housing market. Those buyers who maybe, paused the process, stepped out of the home buying process, if you will, because they've been priced out by high mortgage rates declining could be a very good thing. And if we look at this graphically, what we can also see, right, this is a combination of data from Freddie Mac and mortgage specialists. It shows how the peak of the recession to the trough, each of these yellow boxes that you can see across this graph, how mortgage rates have fallen in recessionary times. Now, this doesn't indicate exactly what will happen every single time, right? It's not a crystal ball. But we can learn quite a bit from what history shows us. I think this quote from Fortune really helps us well. It says, over the past 5 recessions, mortgage rates have fallen on average of 1.8 percentage points from the peak seen during the recession to the trough. So top to bottom, and in many cases, they continue to fall after the fact as it takes some time to turn things around, even when the recession is technically over. So what does this mean? It means if we look back at what we've seen historically, mortgage rates have fallen in times of recessions. The question that we want to be able to answer, that I want to be able to answer for my clients who has concerns about a recession, is what does it mean for the housing market? And this is exactly what we can share with them, right? This is what I share with them. Those visuals on recession doesn't mean falling prices. Recession means falling mortgage rates. And that may be a great time for you buyers to jump back in the market. It may be one of the reasons why housing actually helps us into this soft landing that they keep talking about, we keep hearing about. So with that in mind, let's talk about the other big question that's on everyone's mind, and it's about a housing crash, right? And we talked about it before, and I told you that it's not going to happen. What I want to break down for you is why the housing market won't crash. And I think at the heart of it, in this point in the conversation, is inventory. All right, it's a little bit different angle than we've talked about before, but now you know that there's three places where inventory comes from when it comes to housing. It comes from existing homeowners, right? Current homeowners listing their homes, putting them up for sale. It comes from new construction, right? So newly built homes coming to the market, and it comes from potentially distressed properties, right? So we're talking about short sales, foreclosures. So what I'm going to share with you today is where inventory coming from today, and when we look at the inventory perspective, why that means the housing market's not going to crash. So if you think back to the last time the housing market crashed in 2008, we had an oversupply of homes on the market. Today we still have an undersupply. Anytime that there's an oversupply of homes, so more homes available than buyers who want to buy them, right? That's what causes prices to fall. What I'm going to share with you today is why that certainly isn't the case, right? Like I've said, it just starts with the fact that we just don't have enough homes for sale on the market. This is a look at existing inventory, and today the total housing inventory registered at the end of June, the latest data that we have, 1.26 million units. Now, if we look at that from a month's supply, that's what you're seeing right here. Unsold inventory is at a 3-month supply, right? That's a little green bar that you can see over on the right. Now compare that to the red bars. That's the oversupply that we had during the housing bubble when the market crashed. That's because we had more homes on the market than we had buyers to buy them. We have the exact opposite today. And if you look at this comparatively, where we are today is nowhere near the oversupply that we had in 2008. The typical neutral market is considered 6 to 7 months of supply, right, of inventory. We don't even have half of that at this point. The other place where inventory comes from is, like I said, new construction, right? This is a look at monthly new residential construction. I've broken it down into 4 stages of construction: building permits, housing starts, all right? Those are leading indicators that tells us where the market is headed. And then at the bottom, under construction and housing units completed, those are the lagging indicators, what's happened so far. And we can see in terms of the leading indicators, the two at the top, permits and starts, those are slowing down from May to June. You can see that happening. That's because builders are saying, all right, hold the phone. We're seeing mortgage rates rise, right? They're ticking up. We're seeing that's kind of softening buyers' demand. So we're not going to overbuild, certainly. We're not going to get started on more homes than we know that we can complete and unload. They're being really cautious right now. We're definitely seeing more new construction, though. I mean, we're on pace to build 1.3 million homes in this country. We haven't seen that in over 14 years. That's huge. That's a wonderful addition to inventory, but not anything that's going to take us to an oversupply like we had when the housing market crashed. Facts are facts. Now, the third place where inventory comes in is foreclosures, short sales, distressed properties. And the reason that we're not going to see a flood of foreclosures, a big part of this is because lending standards are under control. So as we think about that, 3 places where inventory comes from: existing homes, new homes, distressed properties, nothing that would cause the market to crash, okay? Now, we've talked a lot about where the housing market is today, why it won't crash, but I think one of the big questions on everybody's mind is, okay, what's ahead for the rest of 2022? So let's dive into the expert forecast, right? What are experts saying is ahead for the rest of the year? Well, we started this conversation today talking a lot about how mortgage rates have been rising since the beginning of the year. And I think that one of the big things everybody wants to know is where are mortgage rates projected to go. This chart is a look at mortgage rate projections that were just released in July from Freddie Mac, Fannie Mae, MBA, and NAR, National Association of Realtors. Now, if we look at these across the board, we can average them all out over each quarter. And that right column shows the average of all four. So what is this telling us? It's really saying that mortgage rates are projected to kind of hang in this steady space, right? We're about where we are now. So mortgage rates being a little more stabilized into the next year and the rest of this year. So that's good news for buyers, right? Who might not have been, who might have been priced out of the market, or maybe they like I said before, they press pause on their plans because mortgage rates have been rising so rapidly. But here's the thing. We're also going to be looking at all the economic factors around us. We've said a lot that inflation is the enemy of long-term interest rates. So what do we need to do? We need to keep watching where inflation goes. Mortgage rates tend to respond in this case, and as the Fed makes moves to raise the federal funds rates to ease inflation, we know that does not dictate where mortgage rates go, but it is certainly part of the conversation. And as we talk about, are we headed for a recession? What typically happens to mortgage rates in those times? All those factors play into where mortgage rates will go over the next year. So according to the experts right now, they're saying holding fairly steady in this low 5 range. And that means it could be a potential silver lining for buyers, right? We certainly do hope it's true that mortgage rates hold steady. We're going to keep our eyes on them and going to continue to keep you informed. Another question on everybody's mind is what's projected to happen with home prices, right? We saw some crazy prices over the last couple of years. That's changed, right? So if you look at what the experts are saying, this is the home price forecast for 2022. And what I do is I follow 7 key industry leaders on home pricing, and these get updated. Some of them are monthly, some of them are only quarterly, but if you look at them and you average them together, the average of all 7 is showing about 10.3% home price appreciation through the end of this year. So as we look at this year, we are certainly seeing a slowing, a decelerating price appreciation, but not a depreciation. Remember, there's a difference. Last year, we saw an average of 15%, according to CoreLogic. Homes appreciated by 15%. We're not necessarily looking at that much appreciation, but nationwide, most markets, experts are saying average of 10.3% appreciation going forward into 2022 and into 2023. The other question that's on people's minds is, what does this mean for home sales, right? We've seen a little bit of slowing in the pace of home sales. We've seen a softening in buyer demand due to those rising mortgage rates. So what does this mean for sales? Well, if we look at what the National Association of Realtors tells us, this is a projection for existing home sales. All right, this is a seasonally adjusted annual rate in millions. So what this means, if you look at the green bar over on the right, NAR is saying that at the current pace of sale today, if we continue on this pace, we are projected to sell 5.1 million homes in this country in 2022. Now, if you look at that compared to 2020, 2021, it's a drop off, right? Well, those were anomalies. Those were exceptional years. Those were out of the ordinary, right? Existing home sales through the roof due to all the record low mortgage rates. Of course, the changing needs of people during the pandemic, all of those things, right? So home sales softening a bit, but still projected to sell 5.1 million homes in this country. So I hope this market report is helpful for you. If you're interested in buying or selling a home here in Central and Eastern Kentucky, please don't hesitate to reach out to me. I am here to help. So thanks for watching. Have a blessed day. We'll see you next time. Bye-bye.